Welcome back. This is the Sharia Investing Virtual Conference 2020. We are into session 3. We're running slightly behind, and therefore we want to focus into the conversation of how the multi-facets of Sharia investing is bringing about into the new dynamics of investing. I have with me on my panel a very illustrious panel, so to speak. We have Dato Majid Mohammad. He's of course the chairman of Etiqa Family Takaful Berhad. We have Munirah, who's trying to reach out to us. Najmuddin Muhammad Lutfi, CEO of BIMB Investment. Naj will be going up first very shortly. Puan Rohaya is the CIO of EPF. And of course, Izzat, Country Director of Wahid Incorporated. Let's not dwell on the synopsis of the events. Let me just call up Najmuddin to give his first salvo or speech. But before we do that, I want to invite the audience to actually answer a poll question, which is on: can Sharia equity markets proposition attract foreign investors to consider investing in Malaysia? Because that's going to be a big part into this first conversation with BIMB Islamic, or BIMB Investment, pardon me. Okay, Naj, your floor, please go ahead.
Okay. So I assume that everyone can hear me. So before I answer the question just now, whether we can attract foreign investors, on Sharia equities, perhaps I probably, share our experience on Sharia ESG investing. I have about 8-9 slides that I'd like to share. Probably can sum up on the BIMB investment approach towards Sharia investing and how we have integrated Sharia and ESG in our investment process. So if you don't mind to move to the next slide. Just before that, before I discuss about how we think about how we approach on our investment process, what's our investment philosophy? Just to give you a quick background, we started on our ESG journey back in 2015. And as of to date, we are managing more than R1 billion of ESG assets. And at the same time, it's also Sharia. This is possible because of partnership with Arabes, Asset Management UK. Their expertise is on sustainability analysis, ESG investing, and why the partnership works really well is because their approach using big data technology, machine learning, and AI when it comes to processing data and information in relations to ESG, and how we've worked together to integrate Sharia in ESG. And since 2015, we actually have developed and have launched a Sharia ESG funds across asset class. We can actually safely say that if a client, whether it's institutional, whether individual investors, high net worth, mass affluent, retail mass market, if they want a diversified Sharia ESG investment portfolio, we can offer that because we have the diversified global, ESG asset class. We have a global ESG equities. We have an Asia-Pac ESG Sharia equities. We just launched 2 years ago, 2018. We launched the world's first ESG super fund, and we also have a Malaysia Sharia ESG equity. So we can now offer a comprehensive Sharia ESG solutions to any type of investors. So on this slide, page 2, it's really the fundamentals of how we think about, how we our processes when it comes to our investment philosophy, BIMB investment approach towards investing. So 3 main thing is, obviously, we are Sharia, but we've integrated with ESG. And in terms of our investment processes, I mean, it's really interesting, this morning when there's a question and Dato was addressing, people questioning whether conventional is better than Sharia or Sharia better than conventional. So, he rightly point out that it's all because of the stock selection, and we believe that in today's world, there's so much of data, there's so much information. It is so difficult for a human fund manager trying to pick the right stocks. So there's so much data to need to be analyzed. So our approach is more of rule-based, more quantitative. We believe that the approach when it comes to systematic investment process, it's much more disciplined and much more disciplined when we are constructing our investment portfolio. And we have seen the results for the last 5 years, because our approach for the last 5 years has always been rule-based, systematic approach. So we've removed all these biases, especially human biases, because this actually attributed to the inefficiency when it comes to the constructing of investment portfolio. And lastly, in terms of risk premium, we are more systematic, like I mentioned, more targeted approach when it comes to identifying the structural opportunities in the market. So these are the three main pillars of our investment philosophy since 2015. If you look at the next slides, please. When we come to when we discuss about ESG, what exactly it means. When we integrate ESG in our investment process. Obviously, when it comes to investment management, I mean, there are two things. Like even the panel this morning were discussing about return and it's about risk. Yeah, it's about return and risk. At the end of the day, when we do an ESG funds, ESG portfolio, whether for institutional investors, whether it's for retail investors, what they want is a risk-adjusted returns. They want is consistent returns. So ESG actually provide that value. I mean, that's why our presentation is called Sharia ESG Investing 2.0. We are actually in the next phase of asset management where we need to integrate ESG. ESG, what it really means is looking at non-financial information or non-financial aspect or data of a company. No longer just looking at financial information about a company, not just looking at cash flow, balance sheet, but it's also to look at the non-financial aspect of the companies. What are the non-financial aspects? It's basically the behavior of the companies, the manners of the companies, how they treat their supply chain, how they treat their resources, how they look at innovation, how they treat employees, how they look at governance, because this has an impact to the financial performance. Obviously, we cannot see the immediate results of ESG information now, because what you've put in now, the resources that you put in now, you can only see the results later. So now with financial technology, with big data technology, with artificial intelligence, we are able to quantify all these non-financial information and be able to integrate in our investment process. So University Oxford and Arabesque Asset Management have done a study. So you can see on the slide, it's called From the Stockholder to the Stakeholder. And based on these studies, it shows that companies who have take into account ESG consideration, 90% of the study shows that it lower cost of capital. 88% of study shows that it shows better operational performance. 80% of the study shows better stock performance. Just sharing our experience for the last 5 years, I mean, because of ESG, I mean, we've removed the tail risk, and we've not encountered companies that basically have underperformance in the financial or stocks because of operation. Because if you look at my next slide, you can see how we construct the portfolio, because for us it is ESG first, and then we screen the Sharia. So the next slide, slide 4, this is give you an overview of how we our investment strategy, the overview of our investment strategy, how we integrate ESG and Sharia. The first thing that we do is to construct the universe, of the universe for us to invest. What are the stocks that we need to invest? So the first thing that we look at is which we do it on a quarterly basis. Under this universal construction, we look at every single company. There are 70,000 over companies globally, And this is possible because of big data technology, because of the machine learning, be able to screen all these companies. And obviously for fund management, for investment management, liquidity preference is very important. So this is the first thing that we look at, liquidity, make sure that the companies has that liquidity for us to, buy and sell. And then second thing that we do is we do the ESG screening. And we're quite fortunate that, we work with RBS and they have this tool called S-Ray. It's like, you go to the hospital and you do your X-ray looking the, underneath of your body. So exactly the same S-Ray look at the corporate DNA when it comes to United Nations Global Compact, when it comes to its ESG thresholds, So everything is quantitative line. So there are more than 250 factors, that we can zoom in to every single companies, and we get that ESG scores, live scores on the daily basis. And this information be able to integrate with our financial analysis. And lastly, we look at the Sharia screening. In our case, we use the IOFI standards, exactly the same like what Izzat was mentioning this morning from Islamic Capital Market, looking at the business activities, looking at the financial ratios. And once we have the construction, we know that, it usually end up for us about 1,300 stocks, where we rebalance this on a quarterly basis. Not necessarily that you're not ESG compliant, you can't be in our universe again. You can, so you have the opportunities every 3 months to come in. So once we have that universe, then only we do our fundamental analysis. This is where we could do the stock analysis, or we call it the suitability analysis, where we look at, things like, balance sheet, cash flow, growth prospects, earning pressure, and also on momentum. Yeah, and then the last part, when we construct the portfolio, this is the beauty. This is where, we've done the Sharia, we've done the ESG. So now is the decision-making process. Do we want to participate in the market? If the market is volatile, do we want to participate 100% or do we want to participate 50%? Do we need to invest only 70%? So this is where we actually assisted by some form of machine learning and AI. For example, like one stocks, there are 1,600 indicators that we can look at. So this is the, we're fortunate we're living in this current age where financial technology is available. It's just a matter of us integrating into our investment process. So we have been using this since 2015, and alhamdulillah, it has worked well for us. The next slide, it just gives you, it just a more granular sort of detail on our universe construction. We look at liquidity, like I mentioned, and then United Nations Global Compact screening, where things like labor rights, human rights, anti-corruption, and environment. These are the major what do you call these topics, and of course there are sub-headlines, subtopics to it, which every single of it has its own attribution, and it has its own scoring. And what's important is these scores come from data, live data. It comes from more than 50,000 sources of data. It comes from NGOs. It comes from reporting. From news, across 15 languages. So because of big data technology, we'll be able to, quantify all this information when it comes to our ESG assessment. And then lastly, like I mentioned, on the business involvement, in our case, obviously, is the Sharia aspect. And the next slide, page 6. Well, this is a bit technical, but I just want to share that, when we talk about financial technology, when we talk about stock selection, when we talk about, making that decision, how to participate in the market, it's really about, this is the really important part, how do you make that decision, whether to buy, whether to sell, whether, so these are the things that we have integrate in our process the last 5 years, where we use some form of machine learning and AI. In this case, we look at momentum score with 1,600 indicators. So it looks on a daily basis. So it's much more, I think, more objective. There is no biases when it comes to the stock selection. The following slide is really looking at the performance, of our global equity Shariah ESG portfolio since 2014. Yeah, this is live performance. If you look at how our portfolio works, it rebalance on a daily basis. Yeah, what it really means is, depending what's the condition of the current market, we were able to decide whether we want to invest or we want to hold cash. So we protect our investors from the market volatility. So if you can see, if you see at the chart, the purple shades or the blue shades, those are our cash allocation. So obviously, we this year, February, March, when volatility was at its peak, we were holding about, the portfolio was holding about 70% in cash. So this is something that is very difficult for human to react and to respond, because when market is so chaotic, it's very difficult for you to respond objectively. So I guess for us, it helps when we are assisted with machine learning and with big data technology, and obviously with the momentum screening system, we'll be able to respond to the market immediately. And what we've done is to protect the investors by moving quickly to cash. And another thing is, when it comes to our portfolio, our concentration for each stock is only 1%. We don't go more than that. So another risk management for the portfolio. So it's just not the Sharia, it's just not the ESG, but ultimately it's also the whole overall investment process, how we construct the portfolio, the discipline, and the systematic approach. And when we look at the performance of the portfolio, although that we are Sharia, although that we ESG, we're quite happy to see that we are outperforming the market. And the thing is, because we're using the next slide, please. Because we are using technology, and in terms of our investment portfolio construction, so we are be able to customize and to adapt and to accommodate all type of investors' demands. Yeah, if institutional investors want a global equity ESG Sharia portfolio, we were able to deliver that. If someone say, oh, I just want an emerging market, equity portfolio, we can deliver that, because we already have a investment foundation that is very adaptive to investors' needs and demand. The next slide is just to give you an idea, the comparison with our peers and with the market. What we've seen is, because of the very systematic investment approach, a very disciplined investment approach, with very comprehensive analysis, through technology, we'll be able to offer, higher return with lower risk compared to the market and compared to our peers. So basically, that's sum up in terms of our approach, our strategy for the last 5 years, and I just want to say that the last part of my presentation is something that we have innovated, something that we have created recently, because we are a fund manager, we're a manufacturer of unit trust funds. I think this industry is an 800 billion industry, has been around for 30, 40 years. So I think a lot of people still missing out from assessing Islamic capital market. There are so many the segments of our market that wants to participate is not able to participate, because of the entry costs and whatnot. So what we've done is we've launched an app. It's a unit trust mobile applications end to end. Just like when you were signing up with a consultant, going to the bank, to fill up the forms and all that. But what we've done is we've automated the whole thing. It only takes 10 minutes to do it. 10 minutes just to do the end-to-end processing, and you'll be able to invest, whether it's a global ESG, whether it's in Asia Pac ESG, Malaysia ESG, and it's for everyone. If you're high net worth clients, you can also come in. You can manage your portfolio, you can manage your investment and your portfolio, because now, because of technology, the user experience, is excellent now. It's all plug and play. You just put it together, and you can have these great solutions when it comes to wealth management, investment management. So what we've done is we have this app is already launched in April. We launched in April 2015, and Alhamdulillah, I think we launched right smack during the COVID-19, during the pandemic. We're getting a lot of response. In just 2 months, there are 9,000 investors, have registered in this app. So, and the AUM is growing now, is in the millions. So we're quite blessed, and we're quite fortunate. And the thing is, it's now there's no excuse for everyone to invest, with global, Asia Pac, ESG, because the entry level is just 10 ringgit. So anyone can do it, and there's no sales charge to it, So people are always complaining about sales charge, entry level. So there shouldn't be any excuse. And on top of that, you for this app, you have an option whether you want the app to do the recommendation to the advice, based on your risk profile, or if you know a fund that you really like, for example, or I really like the global fund, you can just immediately go and buy the global fund. And minimum is 10 ringgit, and it can go as far as 30,000 ringgit a day. So I think for what we've done the last 5 years, we have in a way digitalize our investment process, and now we're coming to the distribution. We're making accessible. When we talk about financial inclusion, we talk about income, upward income mobility. So with this app, we hope that we'll be able to reach out more investors, Malaysia and hopefully regional soon. Thank you, Ibrahim.
Right. Let's bring the
Yeah,
Takaful element into the Islamic capital market. How do you think Takaful operators can benefit into creating a more vibrant Islamic capital market? Yeah, let's sort out that technical issue. Let's jump from Dato Majid to Munirah. Munirah is, of course, the CEO of Principal Asset Management. First of all, can you hear me well, Munirah?
Okay, so can I get my slides? I will try to make it as relevant to the audience today, and don't take these slides as just it's just point of conversation. So basically, what I'm trying to say is, can you go next slide, Ibrahim? This audience is all adage about whether Sharia investment is less compatible, less performing less than conventional. So actually, we got kind of tired to try to explain to people that it is actually comparable. So in 2018, we actually commissioned Wiley and Drake University in the US to go and really study whether statistically there is any difference in performance between Islamic and conventional solutions. So this is a public paper. You can Google it up. You can look for Wiley and Drake University and Semi-Principal Islamic. And what it has found is that in the last long period of investment, there's actually no significant difference. I think many people have talked about this. So I'm not going to run through the white paper in too much detail. But the truth is there's not much difference. Tak ada bezanya. And for people to understand is that investment is actually a long-term approach. So when you look into the different market cycles, I think other speakers have alluded to that depending you have banking stocks or not, depending on the market cycles, right? I heard Dato Dawood also talked about that, right? But what is really important is that during times of stresses, and especially financial crisis, the Islamic indices tend to perform better than conventional because it boils down back to fundamental investing, okay? And the paper, the Drake paper, also outlines that there's really long-term benefits when you include SRI indices or ESG indices over Islamic overlay in the long term. Next slide. So it's a bit busy, but I think most of us will be able to appreciate this. So what we've done is we've plotted the FBM Sharia Index against the conventional CI, as well as we put here the all-country MSCI Islamic excluding US. We've also put in Asia Pac, Islamic all-country, and STI, just for kicks, right? And you could see that actually over a long period of time, and this is about 10 years or so, that actually the FBM Sharia Index has done really well, right? Comparable to Islamic Asia Pac as well. right? So over long periods of time, you would see the benefits of Sharia index. And this is important, right? This is really important for people to appreciate, because as fund managers like ourselves, when we go abroad and we try to educate, our potential institutional or retail investors.
I think we lost the feed of Munirah. We'll get back to her in a bit. Dato Majid, let's start
Sure.
with your presentation.
Okay, thank you very much. Bismillahirrahmanirrahim. Assalamualaikum. First, I would like to just mention a few words about Takaful because it's very mysterious. I don't have slides. I don't have machine learning or AI to explain. But if you, by way of introduction, if you know insurance, I think that's no different from insurance. The only difference is that we sell cover, but based on Sharia principle, end-to-end Sharia principle. And as a Takaful operator, we don't call it Takaful company, we call operator because we are just operator. We are only an agent of the contributor, that is the policyholders. We manage their fund. Of course, when they buy policy, they want to have claim when there is calamities. But on top of that, you also manage the investment for them. The basic guiding principles are Sharia compliant, end-to-end, and the operations are free from all sort of things like gara, uncertainty, free from miser, that is gambling, and free from riba. But another underlying principle is that Takaful is a mutual help each other. Compared to the insurance, is just everything is transferred. A policyholder will transfer their risk to the insurance company, whereas Takaful, we share the risk, including the risk of investment. If they are making losses, in principle, the shareholder as well as the contributor, we have to bear the losses. But in the real world, we never get the contributors to pay back whatever losses. And both conventional insurance and Takaful are involved in investment, of course, because the premium, the contribution that we get from policyholders to pay claim, we must make sure the money is invested. And for Takaful, there's a separation between shareholders fund, the owners fund, as well as the participant fund. We call it tabarruk. Tabarruk is sadaqah, that is donation. Once you sign the contract, you donate your premium or your contribution to the fund, and these are the funds that be managed by Takaful operator. How do they get? How do they make money? They charge certain fees. We call it wakala fee. Wakala means wakil, agent. Certain percentage, they take it upfront. For example, every dollar they take it 20 cents to put in their account so that they can manage their agency, their pay electricity bills, all those things, And at the end of the day, when the investment fund is making money, they also have part of the contribution. They call it profit sharing. There's a formula for that. So that's basically in the nutshell. Most important thing is the fund. We call it tabarruk, is participant fund. It's not the shareholders fund. Shareholders fund is separated for the purposes of having buffer when the company is having a capital problem. And as you know, we are under BIMB Negara, very strict regulation by BIMB Negara. You cannot mix that two funds. So the operation is just, as I mentioned, the operator is just a manager to manage the fund. And at the end of the day, when the fund is making profit, we share the profit. Let's move into the some of the constraints imposed to the Takaful operator in managing the fund. As you know, we are, as well as banking industry, we are heavily regulated by BIMB Negara. First thing, BIMB Negara issue kind of guideline on minimum and maximum holding of certain asset. For example, you can't hold equity more than 20% of your asset. You have to put minimum 10% of your asset in liquidity, a liquid asset, because our job is to pay claims. You must have liquidity. The claimant will come any time of the day and we have to pay that claim. So it must be liquid. And also in terms of other assets like sukuk or those things, they say a minimum 30%, we have to comply with that. So basically the exact mixture of the Takaful company, basically liquid asset, liquidity, that is deposit as well as money market. The next one is share, equity, of course, Sharia compliant. And the third one is low risk asset as well as sukuk. And then another guideline which is really hindrance to the very creativity of the asset manager of the Takaful company is the guideline called risk-based capital. That will encourage the operator to hold high-rated asset. Because if you hold a low-rated asset, your capital requirement, that is capital charge, will be higher. For example, you hold AAA bond, sukuk, the charge only 2%. But you hold less than that, maybe A minus or even B, you have to pay 5%. So that is strain, that is drain on the capital of the Takaful company, Takaful operator. Because of that, a lot of these company will hold high-rated asset. Generally, Takaful operator have no foreign liability, so we are not involved in foreign asset because the domestic Takaful, we only write Takaful domestically in ringgit. So we don't need, and it's not allowed a Benegara to hold asset in foreign currency. Yeah? That is one of the constraints to leverage of our asset management. Apart from that, there is external factor. Internally, we also have kind of risk appetite guidance approved by the board, and also asset liability framework, which we have to always be matching, asset matching liability. Our liabilities are claimed, amount due to the reinsurers, and we have to make sure at all time the asset will match the liability. And also that will be determined by Sharia committee. But the killer requirement and the most stringent requirement of the Takaful operator is that if there is a deficit, there's a negative of the fund owned by the participant, what we call it Tabaruk fund, that is donation, has got to make good of that deficit. Okay, so hence they are very careful in investing the asset to make sure there's no deficit. If there is deficit in the fund, the Takaful operator has got to make good of that with no return, no charge, no interest, nothing. And if the deficit continues for say 4 or 5 years, you have to write off that. Okay, this is a killer requirement that really made the Takaful operator very nervous and very cautious about whatever investment they are taking to that. So that is a killer one. In terms of after the fund continue to be deficit, you have to write off that. Meaning you don't get anything, you have to give a free asset to the policyholder. These are the reasons why majority of Takaful operators are very conservative in managing their investment fund. Their conservative approach reflected in the profile of their asset allocation. A typical asset class and percentage of the asset allocation is as follows. If I can read here. Low risk asset, that is government investment and MGS, around about 24% of the asset. And then sukuk, very high, 45%. Equity, unfortunately, for the past few years, very low. Although Benegar said you can hold up to 20%, but on average, only 5%.
All right,
for
Dato.
that matter, equity is only 3%.
Dato.
And then, yeah?
Yeah,
Can you hear
we'll
me?
get back to. Yeah, we can hear you, but there's intermittent issues. Let's get Puan Rohaya first before we jump into everyone else. Puan Rohaya, embedding Sharia investing in strategic asset allocation framework. Where do you think is the direction of Islamic asset management? Do you think that Sharia investing as a thematic investment approach, or is it more of a sustainable way of doing things? Puan Rohaya?
Okay, I have a slide to show. Can we put up the slide? Okay, can we go to the next page? Let me bring you to our journey, how our Sharia investment started. Next page. Okay, we were established back in 1951, and at that time, we were just investing in MGSs. As you know, only in 2010, we started to introduce Sharia mandate. So the first one was Sukuk mandate and Sharia World and North Asia mandate. So that's all been awarded to our external fund manager. In 2016, that was the inaugural launch of our Simpanan Sharia on the 8th of August 2016. So we are the first pension fund in the world that had introduced Sharia savings. In 2019, we introduced our online registration for our Simpanan Sharia, and also at the same time the launching of our iInvest platform. Next. So this is our strategic asset allocation. Is as you can see, basically it's on the underlying mission of safeguarding members' interests. So currently our asset stood at 874 billion, and out of that 54% in fixed income. That gives the capital preservation, and equity is about 36%. That gives us our capital enhancement. 6% in real estate and infrastructure, and 4% in money market. Out of the 874 billion, 337 billion are all Sharia assets. So that represent about 38.6%. Next. So we are very diversified investment in terms of our portfolio. So we've invested more than 40 countries, and Sharia exposure are in all 7 regions in both fixed income and equity. Next. So this is an interesting chart here. Currently we have 14.7 million members. And out of that, 877,000 members have opted in for Sharia, Simpanan Sharia savings. And out of the 14.7 million members, 54% are Muslim. And out of that, 89% are in conventional, and only 11% in Simpanan Sharia. So here we want to say that there's a lot of opportunity to grow our Sharia savings. So at the moment is about 97.4 billion in terms of total savings, and out of that 99% are Muslim. So there's a lot of upside in terms of growing our Sharia saving. Recently, when we launched the online registration, you can see a huge uptake in total registration of Sharia. So as you can see, first quarter 2020, it's already 139,000. So about 81% growth in online registration. Okay, next. Okay, so Sharia asset, 79% is still domestic. As you know that, we are still a domestic investment house, and only 21% in global. So in terms of asset allocation for Sharia, 52% in fixed income, 39% in equity, 3% real estate and infra, and 5% in money market. So it mirrors the larger asset allocation we have at enterprise level. Next. So let me share with you our member investment scheme, which is the MIS. So where members can transfer fund from account 1 to approve fund management, FMIs. So currently we have 22 FMIs. So of them, 388 funds has been approved, and out of that, 153 are Sharia funds, so that represent about 39%. And in terms of value, the total AUM is about close to 47 billion. And in terms of value, Sharia funds contribute about 73%. So value-wise, there's a lot more Sharia funds being subscribed by our members. Next. So let me just have a quick introduction of our iInvest, our digital platform. So that was launched back in August 2019. So it actually enables members to invest in unit trust directly from their I account into this iInvest platform. So why we believe this is very attractive to members is, number one, it has a lower sales charge at a maximum of 0.5% as compared to 3% on an offline transaction. It gives greater flexibility. It consolidates view of all members' holding in all their unit trusts, as well as hence ability to make informed decision, and it's also another channel of withdrawal for our members. So more than 20,000 transactions has been done since we launched this iInvest. Next. So let me share with you the Malaysian Islamic capital market. So the size today is about 2 trillion. So that represents approximately 65% of the total Malaysian capital market. So it's a very huge size of market in terms of Sharia. Next. So as you can see, for the Islamic asset under management, about 22% Malaysian Islamic asset under management. So it's about 20% currently out of the total AUM. So for us, if you see the chart on your right, 28% we have actually outsourced our mandate to Sharia asset managers. So roughly it reflects the current market today. Next. So the key question today is the question of growth potential of Sharia. So I think what we need to understand about why we've not seen significant growth in Sharia, is it a question of supply and demand? On the supply perspective, are there many product offerings? On the demand perspective, are just investors not keen in investing in Sharia? In terms of perception, investors shying away because of the expected low return, or is Islamophobia, prejudice against direct or indirect funding of Islamic activities? So we're not too sure, what exactly the underlying concern here. And product awareness. So the question is that currently, is it a low level of awareness of understanding Islamic finance product or services that causing slow growth and demand, and whether it's lack of liquidity, and the other point is on asset managers' role. I believe it's still underdeveloped ecosystem, whether we have lack of complete Sharia product offering, and the last one is regulators' role, whether regulators are improving regulatory clarity or harmonizing between Sharia and conventional in terms of financial standards, improving supervisory tools. So those are the questions that we need to think about, and whether we have an answer today. Next. So if you look at Sharia and sustainability, so this reflects the value and faith of an investor. So although they remain a separate investment approaches or strategy, Sharia and ESG investing are converging. So there's a huge degree of overlap and convergence between Sharia and sustainable investing. Investors, I believe investors who embraces Sharia principles should also aspire to adopt the idea of sustainable investing. So if I just can recap, Sharia principle is to promote maqasid Sharia, which is ethical practices, positive and long-term social return outcomes, and application of screening of non-halal activities. So so we see the development of this is positive, but just something to think about is that you know there's approximately 1.8 billion Muslim globally, representing around a quarter of total population. However, despite the numbers, you know, Muslims have been underserved by asset management industry with limited innovation in product offering and low growth in assets. So this comes at the time when there has been a rapid, extreme growth in demand for sustainable investment strategies. So this is the question, you know, the rules that govern Sharia are set in terms echoing framework of sustainability investment. Yet, Sharia investing has gained limited traction. So I think that's something that we should ponder about. So Ibrahim, so that's my final slide of presentation. Thank you.
Thank you, Puan Raya. Let's now go on to Izzat. But before we do that, there's one more question that I want to ask you guys if you're still watching. Will digital asset management companies like robo-advisors replace the needs of conventional asset management services? Please answer those kind of questions. And then Izzat, of course, the floor is yours. Please go ahead with your presentation.
Sure. Thank you very much, Ibrahim. Firstly, Assalamualaikum and good morning to everyone at Bursa, fellow panelists, and also everyone tuning in. And thank you to the organizers for inviting us to participate as a panelist in SIVC 2020. So I will answer the broad questions by addressing 7 points. The firstly is the introduction to robo-advisory and the introduction to Wahid Invest. So for us, robo-advisors generally are digital platforms that provide automated investment services. So typically a user is asked risk assessment questions and the robo recommends a diversified portfolio that is most suitable to the user's risk profile. The user then invests and the robo will manage the fund and rebalance the portfolio when certain conditions are triggered to ensure that the risk profile of the user is intact. So in Malaysia, robo advisors fall under the guidelines of digital investment management from SC. And then for Wahid Invest, where we come in, we are a US based halal focused robo incorporated in 2016 in the US, aiming toward Muslim and also ethical investors. So we run our platform on the Wahid Invest app that's available from Apple Store and also Google Play Store. And our services offered is to more than 130 countries through our global platform. But we also have localized platforms for the US, the UK, and also Malaysia. For Wahid Invest Malaysia specifically, where I come in, we were licensed by SC last year as the first Islamic BIMB company. And in terms of our underlying funds, we are product agnostic. That means we are not tied to any particular asset manager. And that means that we can then pick and choose the best passive investment vehicle, be it ETF or funds for investing for each of the asset class for our investors. And secondly, how does then Sharia robo-advisor support Bursa Malaysia I? And how do we invest through the platform? And what's the comparison between Bursa I that we have here in Malaysia and also in our other markets, particularly the one that we have in the US? So as a Sharia outfit, Wahid Invest Malaysia, we primarily use Bursa I for our local trades. Again, by having the Islamic CDS account open through Islamic POs and trading local Sharia ETFs. And end-to-end, we are Sharia compliant from our custodian to our brokerage account. So we don't incur any interest income, and the returns are purely from capital gains or dividends from the ETF and funds that we invest in. So this compares to our US market that does not have an end-to-end Sharia platform. So the portfolio returns are Sharia compliant, but they would then have to purify any income arising from impermissible sources, for example, the interest income earned. So this adds a layer of operational undertaking for our US platform, where impure income will then has to be monitored, recorded, communicated to clients, and then also purified. And thirdly, what is the take-up rate of our platform since it was launched? How receptive are Malaysians and also global investors towards Sharia robots? What's the position of digital asset managers in Malaysia? And how big is the market penetration that we are seeing? And compare that to the global penetration. So for the half of it, since our launch last year, while we can't numbers, we've seen encouraging participation in investors, which are our target market, beyond our initial expectation. So this shows that there is a product market fit, specifically for a Sharia robo-advisor in Malaysia. So even during the market downturn that we saw in March due to COVID-19, most of the investors remain invested as they focus more on Sharia aspect and also the long-term investing. And the story is also similar to our global clients, where in most countries, Wahid is probably the only Sharia investment solution that they have. And they save with Wahid there primarily for their retirement planning. And then it's a growing segment, the growing segment in the local fund management scene, and it is still in its infancy. So in the Malaysian fintech segment, we are positioned as the tech, and other segments may include payments, wallet, KYC, insurtech, and others. And in terms of market penetration of DIM in Malaysia is still very small. We estimate it to be around 0.1% of the local fund management AUM. And global penetration this year is expected to be 2 to 3%, and that aided by the more mature US robo-advisor market that began after 2008 global. So you're seeing that a more mature market is capturing about 2 to 3% of the fund AUM. And number 4, what is our own ETF that we launched is Wahid Sharia ETF last year, and what are the exciting innovation and development in the Sharia compliance space. So we actually introduced a US ETF last year in July to cater specifically for our US customers, because there wasn't a lot of Sharia compliance solutions in the US, especially in the passive investment space. So our ETF, Wahid USA Sharia ETF, ticker HLAL, halal, invests in a larger pool of Sharia compliant US stocks, which is more than 200 stocks. So this brings a greater diversification benefit to our clients. We also introduced the same ETF to our Malaysia clients this month. Innovation of Sharia compliant robo-advisor. This is a growing space, and for now we are seeing a digitalization of asset management to become a robo-advisor. In the future, we are seeing more of a personalization of the investments. This means that as we capture a bigger target audience, we can personalize the experience from the mass affluent to the high net worth. So as this segment matures, we probably see a goal-based investing personalization to the clients, either by self-directed, meaning that clients, they do it themselves, or by personalized advice. Basically, the robo-advisors might have 1 or 2 in-house advisors that can then give a more personalized advice to the clients. And point number 5 is, how does robo compares to the traditional asset managers, and will it overtake traditional asset managers? And do robo actually compete or complement with traditional asset managers? So firstly, for this point, I would like to point out that fintech in general should not be seen as a risk to the traditional financial industry. It is actually a tool to unlock new growth opportunities because it allows for faster execution and also better transparency in general of transactions. And in Malaysia, a DIM company is actually, we think it's complementary to the traditional asset managers. DIMs in Malaysia actually cannot create their own funds. Therefore, the diversified portfolios that we invest in is in third-party funds, provided usually by the traditional asset managers. And the passive investment strategy that is utilized by DIMs is also actually complementary to the active investment style of the traditional funds. And again, as I mentioned earlier, the global penetration globally is still at around 2 to 3%. So actually, we don't think that it's a competing segment. It's actually a complementary segment for the traditional asset manager. So we, at this point, we don't think that it's going to be overtaken by digital asset management as it stands. My second to last point is actually the challenges that we face in general as a robo-advisor, and also Sharia robo-advisor specifically. So in general, we face a credibility challenge. The IMs are new in Malaysia, so there is skepticism about the authenticity and also doubts about the technology. So for legitimacy or authenticity, we are actually grateful because we have a forward-thinking regulatory body, which is SC, that sets out the framework specifically for robo-advisors to thrive in the local capital market. And for the people part, the key for us is to encourage adoption of fintech through communication of the positive balance between the benefits and drawbacks of the services. And we also have found, interestingly, the understanding of DIMs is supported by the local investing community as well. And the challenge for a Sharia robo specifically is actually the limited investment universe. We rely on a limited selection of ETFs to construct the risk portfolios. Conventional ETFs are plenty, but we cannot say the same for Islamic ETFs, where the standardized Sharia compliance set of rules is applied. So this limitation is actually what led to us creating our own Islamic ETFs in the US in the first place. And to my last point, which is what about COVID-19 and the effect of it to the digital space? How does COVID-19 pandemic affect the performance, and also what are the new strategies going forward to optimize the performance return? So speaking from our own experience, the stay-at-home orders actually meant that public turned to digital solutions to meet their everyday needs. And this includes turning to wealth digital platforms, be it either through us as a robo-advisor or through digital trading platforms where they can do their own trading. So in that sense, we saw, and we're still seeing, limited impact by the crisis in terms of onboarding new clients. But of course, the market downturn in March meant that in terms of transactional, we were also affected. But since then, as market recovered, normal pattern resumed, and we are seeing more people coming onto the platform, which is encouraging to us. And as Tan Sri Wahid mentioned in his keynote address, and it was also reinforced by Mr. Mustafa's slides earlier, we saw outperformance of Sharia compliant investments compared to the conventional counterparts. So we see this resilience as a strength of Islamic securities, and one that we can leverage on to further optimize the return of our portfolio. Lastly, our hope is that as passive investment gains traction here, more Islamic ETFs or passive funds are created by asset managers that can be used to further diversify and enhance the risk-adjusted return to retail investors in general. So I hope that covers broadly the topic. And with that, thank you, and I pass the floor back to the moderator.
That's fantastic, Izzat. You covered quite a bit, and we just need to circle back to some of the speakers earlier. Let's start with Munirah. Could you, because we dropped off midway, right? But could you share with us some real-life examples on the various companies in handling Sharia investing, perhaps from the principal kind of experience?
Okay, I think as a group, Shariah, we've been managing Sharia investments for more than a decade. So for institutional clients, for corporate clients, as well as for retail investors. So as a group, actually, our AUM is quite large. We're about $6 billion US, about 24 billion ringgit. And one of our forte is obviously global Islamic equities, global sukuk. Global sukuk now is more than a 500 billion. Global Islamic equities is also close to $1 billion US. So you would brand us as traditional asset, but I just want to put it out there that I'm fully supportive of robo advisory and fully supportive of digital, and that actually when you understand about the efficient frontier, there's the algos that try to plot in the most efficient set of investment portfolio based on the goals of the investor, right? So when you think about that, right, I think robo advisory and Sharia, as well as buying a normal funds, has got a long way to go. I really in particular enjoyed Puan Rohaya's presentation, as well as the Wahid's presentation just now, because I think it's very complementary. To touch on Puan Rohaya's point about product and whether asset managers are doing enough, the truth of the matter is, I think the perception needs to be fixed. I think increasingly perception on returns are being fixed because investors want more than just returns. Investors also want Sharia compliant, ESG, etc., etc. So I think that perception journey continuously is conferences like this are trying to fix it, right? But in terms of product, right, it's true that I think Sharia products is still lacking in the market, and part of the issue is also on structuring, right? So for example, real estate Islamic, right, global real estate Islamic, the structuring of those kind of solutions are not so simple. Okay, and then when it comes to funds, right, or ETFs, right, ETFs is also not enough Islamic ETFs. So if you want to plot a very good efficient frontier for robo-advisors on Islamic, it is challenging. It is, factually challenging because it's not enough data points, right? There are not enough data points to come up with the most efficient portfolio as compared to traditional. So admittedly, like asset managers like us, right, and we continue to work on the forefront of this, trying to bring in new solutions, and we need to continue at that. So I think it takes a whole ecosystem to get this out.
Fantastic. I want to bring into that conversation of perception, as well as what Izzat brought up just now. I guess brand legitimacy, right? When Takaful, for instance, started off, decades ago, I'm pretty sure they have the same issues there. When Islamic asset management started coming up, every single time Sharia follows a conventional product or conventional service, there has to be this kind of hurdle that they have to go through. Any of the panelists want to pick up this argument where what is the best way or what is the shortest way possible for us to close that brand perception gap between the Islamic offerings, particularly new ones like Islamic robo-advisory, for instance, with that of the market comprehension and market viability on accepting those brands and those products? Any panelists can pick this up.
Okay, I think I can speak on behalf of Wahid. We set out to be specifically a Sharia compliant, a halal focused investment. So when we localize, for example, in Malaysia, we are lucky because we already have a standard setting body, which is the SAC of SC, for the local Sharia compliance guidelines, and also the Islamic funds here are also certified by SC. So it was easier for us to just have a very specific set of universe of funds and ETFs to choose from. But speaking from a global perspective, from our group level, it becomes more difficult when you try to find underlying funds in the US, for example, or in the UK. So our group's Sharia Review Board, we are a member of AUFI. So we try to stick to the stricter guidelines of AUFI. So this gives us, and again, being an associate member of AUFI gives us a particular credibility as well for the global audience. So yeah, the support from local regulators as well as broader global standard setting body is crucial, especially for a global player like us to basically say to the investors, here is our credibility. We are adhering to the stricter regulations of global auditor accounting body, and also for local, we are also adhering to the local regulator as well. So that is from our point of view.
Yeah, anybody else wants to jump in?
I think back to my point about the conversion of conversion of Sharia and sustainability, because I think there's a lot of awareness of sustainability, but why Sharia is not. So I believe that the provider of Sharia funds should move beyond basic Sharia-based exclusion of industries and companies from investment universe to probably an approach which more fully respect the Islamic values of socio-economic justice, and overall well-being. So that's really sustainable investing. Yeah. So I think we have to shift into how do we market Sharia now.
More
I
marketeers.
wanted to say,
Yeah, I think
Naj, Dato Majid? Yeah, please, Munirah, go.
Can I chip in on that? Because Banagara has
Yes, yes,
introduced a
please.
value-based intermediation, VBI, in the banking, and now coming into the insurance cover as well, where there are three areas that is being promoted. That is, the investment should be compliance with all the Maqasid Sharia, the five pillars, and also should be environmental friendly and also sharing of the wealth. These are three areas that are being promoted by Banagara in the Islamic banking, but not yet in Takaful. But it's coming. We at Etiqa, we are putting that friendly. Also, the value-based intermediation. Not only you make profit, but you have to give back to society in terms of environment instead of profit sharing with the community. Okay, these are the areas. It's not been out yet by Banagara, but we at Etiqa, we are already started doing that. From the small thing like switching on your light, uh, throwing rubbish in the proper place. That is part of the environmental friendly, of which we have to inculcate from the bottom up, and that will be translated into the social value for that matter. And not only making money, because everybody is talking about making money, but where is the social responsibility of the operators? Yeah. The insurance or the Takaful is into that value-based intermediation,
Right.
VBI.
Right. We
Brian,
have
can you hear
to
me?
close this conversation, and we will continue to have these kind of questionings and questions that can be sent over to these kind of respective speakers. But for now, we have to end session 3. Thanks very much for watching. Again, thanks for all the panelists for taking the time to speak with us. Dato Majid Mohammad of Etiqa, Puan Munirah, Izzat, Puan Rohaya, Najmuddin. Again, thanks very much.